Mary Shapiro isn't the only one in Washington who believes there is a need to regulate the derivatives market. Commodity Futures Trading Commission Chairman Gary Gensler talked to us yesterday about the proposed legislation to address his marketplace.
What we want to do is protect the American public. That's our foremost thing. We want to make sure that markets are fair and orderly and the prices reflect those inflows into the marketplace.
Gensler also told us the commission wants to make sure that no trader has such a large position that it becomes a burden to the marketplace. Last month, Treasury Secretary Tim Geithner told lawmakers that investors and corporations have used derivatives and other opaque financial instruments to, quote, evade regulation. And I have with me a guest here on set who agrees with that. Michael McCarty used to trade options down at the New York Stock Exchange. He now has started his own hedge fund, Differential Investment Partners. Welcome back to the show, Michael. Let me ask you about that. I mean, is it true that traders use derivatives to game the system, so to speak?
Well, we call it cross-regulatory arbitrage.
That sounds so much better and more legal.
You know, the UNG, the natural gas ETF, I think is the clearest example of how this is taken on, and particularly it's received a lot of headlines recently because it is essentially position limit the CFTC. Basically, through that and regulated by the SEC, I can buy an equity security, only be regulated by the SEC, and have an exposure on the commodities exchange, which is regulated by the CFTC, but via this route is not. There is really nothing that prevents, and this is the issue that they're addressing, that would prevent someone to be personally limit on a commodities exchange and then also obtain a sizable position through a security that accesses that exchange, but fly under the radar of the regulatory authorities.
So you think, though, that this is something that should be dealt with? I mean, you, even as a libertarian, believe that the government should step in here.
More regulation or better regulation? That's the question. Right now, and frankly, I think if they codified and made the CFTC part of the SEC, had one regulatory body, they would not be as onerous as it is currently. I mean, if you are a sell-side firm that does stocks, bonds, all the type, you are effectively subject to 4 different regulatory agencies, 4 different reviews. It should be one review, one regulatory agency.
All right, hang on a second. Listen to what Mary Shapiro says when Judy Woodruff asks if she thinks that they have been able to get enough through Congress.
It does, for the very first time, bring instruments like credit default swaps under regulation so that both the dealers would be regulated and the over-the-counter instruments that can be standardized. We'll have a central clearing party, which will do an enormous amount to mitigate credit risk in the system, and it will encourage exchange trading, which will provide tremendous transparency into these instruments. So I think it goes very far.
See, it sounds to me like there's a power grab here at the SEC. There's a power grab going on at the CFTC. We know there's a massive one going on at the Fed. It's not going to achieve the goal that you want of unifying regulation.
Right. No, it won't. We can't agree on, you know, again, this is part of the problem with the government. Once you create it, it's hard to get rid of it. So we have 4 or 5 regulatory agencies. None of them want to quietly go into the sunset. They want to end up being the lead role.
So the outcome, in your opinion, will not be favorable?
No, I think at the end of the day it will. One, it'll be less onerous on investors, but most importantly, and this is the topic that's not addressed, Mary Shapiro talks about greater visibility, transparency to aid chasing these people down, the criminals, enforcement. At the same time...
Not criminals yet, right?
At the same time, from my perspective as a market participant, greater transparency improves the price mechanism that is the market. Frankly, I would suggest that we may not have had the dramatic sell-off that we had in the fourth quarter and the first quarter of this year if more people had been aware of the extent of the derivative exposure that many of these financial institutions had taken on in a way that was basically not evident to most people.
All right, so fair enough. You've just started a hedge fund, Differential Investment Partners. She also says in that interview, and if you check it out tonight at 6 or anytime during this weekend, you'll see yourself, that she wants to regulate hedge funds more closely. Do you think that's a good idea?
I have no problem with hedge funds reporting positions more frequently. You know, I don't know to what extent her intent of regulating them is. But at this point in time, you know, Bernie Madoff's a great example where he was subject to 4 or 5 different regulatory agencies. The agency that covered the broker-dealer went in and investigated, asked to go see the investment manager, and was told that they could not. There's no reason that a different regulatory agency should regulate different parts of essentially the same firm. Starting up my hedge fund, I anticipate that we will be ultimately subject to SEC regulation. And frankly, as long as it's one regulatory body that I have to deal with it, I will not object. But if I have to report to 4 or 5 different regulatory agencies. If, for example, we decide to trade futures, I will need to, at this point in time, that's going to be an onerous burden on an emerging fund manager such as myself.
Isn't it a burden, though, Michael, that you can expect? I mean, do you really think they're going to make it easier for you?
One regulatory body I have no problem with, and I expect it, and we're pricing that in.
Are you concerned if you'd step back and look at the regulation issue from the top, right? We've seen regulation starting in the 80s get hammered out and gone, and incredible growth as a result. Now we see, it looks like, some say, a regime of more and more regulation, heavier-handed regulation coming on maybe for the next 10 years or more. Do you see slower growth because of that? I mean, is more regulation going to eventually crimp your profits?
Well, if you take it outside of my business and outside of Wall Street and look on a macro economic level, absolutely. There is a land grab by the government basically today to take over greater and greater aspects of the economy in your life. In terms of regulating Wall Street, again, I don't think that better regulation necessarily means more regulation, and I don't think that that will impact the price. There is a price now of the compliance role at a Wall Street broker-dealer that is pretty significant in his need to satisfy multiple regulatory agencies.
I think, probably anyone would agree with you that better regulation is a good thing. More regulation, maybe not necessarily. But the problem is, what are we going to get here? I mean, what do we get in reality?
I'm not really sure. I'm encouraged by what Mary Shapiro has to say. I think at least while she may put it in the terms that are appropriate to her role as chief cop at the SEC, I think that she's headed down the right direction. But again, I think that, in my opinion, that the SEC should be the surviving entity and that the CFTC should be part of the SEC.
All right, Michael, thanks so much for joining us. Pleasure having you back on the show. Michael McCarty there from Differential Investment Partners.